Deepak Shenoy, Naresh Mirani, as well as Kunal Bothra then on the show to talk about how the trade is going to pan out from here. Kunal, hi, afternoon. Let me first come to you on a chart check because, once again, you're seeing a quiet move across the globe, but, we're charting a different course.
Yeah, we're charting a different course altogether, but I think it's about the strength from our market internals because over the last 1 week we've gone through a very strong sectoral churn for our markets where we've seen the shift coming from the performing erstwhile sectors like IT, pharma, FMCG to now decisively the banks and more importantly within the banks more heavyweight towards the private sector banking names. And we're seeing a very strong round of a breakout from many of the private sector banking names. Now add to the fact there are other two sectors which are also making a comeback of sorts, and that's the auto pack, which over the last 1.5 odd month was going through a corrective phase. So the auto index, many of the auto stocks are looking quite charged up, as well as the metal and the commodity index, which have also started to perk up, as well as many of the stocks getting into a breakout. So I think it's a wave of long built up for a few sectors, short covering for the others, stocks which are actually keeping the markets a lot more buoyant. I think we're now in touching distance of breaking that 26,000 mark. I think that breakout should happen potentially just closer to the expiry day for the index.
Okay, that's that on the Nifty. Deepak, hi, afternoon. Good to have you on the show. Finally, a comeback by banks, although one is still a little circumspect that is it one of those flatter to deceive kind of moves that we've seen pretty much all through this year?
Yes, Aisha. In fact, I think they were the last, I don't know, man or woman standing at that point in the pack that's everywhere. Everything is moved up. But to be fair, the banking sector's had its challenges with respect to the RBI trying to curtail a lot of growth from the unsecured loans front, the RBI changing certain definitions of what banks could do, and the big merger of HDFC and HDFC Bank has kind of thrown a lot of slowdown surprises, at least for that bank itself. And margin compression overall because deposit growth is not meaningfully high, and some banks are feeling some pressure because the wholesale deposits are concentrated in a few banks. Now, what's happening now is because of interest rate cuts, you're actually getting a much better handle on...
So sorry for this interruption, but the Vodafone Idea con call is currently on and you may also want to listen in.
Balance of about rupees 180 billion as of June 30, 2024. And we are sufficiently funded to execute the capex plans in the interim. On the AGR matter, the Honorable Supreme Court has dismissed the curative petition filed by telecom companies. The curative petition was raised on very limited aspects of the AGR issue, that is, to correct the errors in demands and waiver of penalty and interest thereon. In the Honorable Court's opinion, the petition did not meet the criteria laid down for admitting the curative petitions. Basis this, they did not accept the petition, and therefore there was no discussion on the merits of the case. While a positive outcome would have no doubt eased the overall liability and enabled faster deleveraging, we would like to reassure you that our long-term business plan and revival strategy remains unaffected. In fact, our long-term business plan, which has been shared with the banks, and on the basis of which the techno-economic evaluation has been done, has been constructed without considering any potential benefit in the AGR matter. Hence, while the outcome of the curative petition is disappointing, it does not have any impact on the long-term business plan of the company and its existing liabilities. Also, I would like to clarify that the curative petition outcome does not create any impact or modification on cash flows as already considered in our business plan. Most significantly, the government's commitment to support the three private player market remains unwavering. With 23% shareholding and receivables of over rupees 2,000 billion from the company, government is the single largest stakeholder in the company. In light of the curative petition dismissal, we have initiated a fresh dialogue with the government on likely remedies. To conclude, it has been a very eventful few months for us here at Vodafone Idea. Between March to July, the company has raised rupees 240 billion of equity, including preferential equity raise of rupees 24.6 billion from Nokia and Ericsson. In June 2024 spectrum auction, we acquired 50 megahertz of spectrum across low band and mid band in spectrum in 11 circles. The additional 900 megahertz spectrum acquired in 7 circles allowed us to dedicate adequate 900 megahertz band spectrum for 4G, thereby enhancing the experience of our 4G customers.
Okay, so that's the word coming in from the Vodafone Idea management. Yes, disappointing indeed that the AGR matter did not go their way, but as per them, it's not going to impact any cash flow situation, as well as the fact that they had reached out to the lenders without adjusting for any AGR relaxation. So that does not change as well for them. They are saying that the long-term business plan remains intact, and this new capex that they have done is something which is going to be funded by internal accruals plus the debt that they have laid out and planned very well. In any case, Deepak, you also talked about unwavering commitment coming in from the government to keep it a three-player market. Do you think that is the case which is going to be despite the negative outcome of the AGR case?
So, I mean, it's complex because, of course, they want 3 players in the race. They don't want it anything to be a duopoly. But I don't think it's 2 healthy players and 1 unhealthy player in the account of a negative 100,000 crore balance sheet kind of a player. Banks in general don't lend to negative balance sheet companies. If your reserves are negative 100,000 crores and you weren't actually one of the largest business families, they would not actually be giving, no bank would be giving you a loan. So at this point, the deeply negative reserves and the balance sheet itself is so worrying that at some point there has to be an explanation of how this cash flow is ever going to come about. Are they going to borrow from banks and pay the government? I don't think that is meaningful because that does not help the company even one little bit to do that. And there is more than 180,000 crores in the next 5 years that has to be paid to the government. I don't think this is an easy task, given that till now all their efforts have only been able to raise about 24,000 crores in equity. The numbers are just staggering. So I don't believe here that while the government may want a 3-player market, it may not be 3 players with the exact same management that you have today. You could go for the situations where the debt has been too much. We've always had bankruptcies and a bankruptcy act to allow a company to allow its creditors to take a haircut and then transition the company onto new management, which can therefore operate at a lower cost. It may still have 3 players, but just may not be the same names.
The question is, Deepak, is that adequately priced at $11 a piece? Would you buy afresh?
If there is actually a bankruptcy, the price should be 0. Then, of course, there's no. If there is a bankruptcy, but I don't think there is one right now because nobody is taking this company to bankruptcy court at all. There is no reason for them to go for right now because they have a year to get to the point where they have to pay these dues, right? And they could still convince the government to convert that 29,000 crores, which is payable in October of next year, into equity. Of course, the government will become a significant owner of the company, but I don't think they have too much of a choice. The minute the government crosses 50%, it becomes a PSU, and therefore, all the hiring and all the salary and all that stuff will, kind of have to readjust to the PSU levels, unless they get like an exception, especially for it. But I think that would not be, useful either for the government or for this company. But short of that, I don't see any other way that the company can make the cash flows to pay these massive bills. They've run out of court options to go after to get some kind of relief. So I mean, I don't think it'll happen right now in terms of a bankruptcy, but I just see this as, how are they going to get this? It's just in front of you as a wall.
Indeed, a lot of question marks there. But Naresh, we've been talking about the charts of some of these telcos as well, right? Vodafone, Indus Towers and Bharti, which is sitting at a life high. Sure enough, stick with Bharti.
So Bharti already has made a lot of a run. So for now, it is at a point where eventually you want to look at booking profit. So continue to hold on, keep a trailing stop loss and ride. The trend still remains positive. Indus Towers is the contrarian bet which one can look at. So every time there has been a problem in Vodafone Idea, we get a correction in Indus Towers, and that has been an opportunity over the last 2 years to buy. So closer to 360, 380 is a good zone wherein the stock could be a buying opportunity.
Kunal, what's happening to Amber Enterprises and Finolex Cables?
I think we're seeing many of the mid-cap names going through a very sharp price volume appreciation. Amber Enterprises also, I think, has given a breakout. 4600 is the previous breakout zone or a swing resistance for the stock. It's broken past about those levels by a margin of 8 to 10% further. So I think it's now crossed 45,000 plus levels on an intraday basis. Again, volumes being on the higher side indicates that this could be a start of a fresh trending move for the stock. The previous consolidation was almost 250 to 400 points for the stock, which means we could be looking at 5,200 to 5,400 as a potential target range for the stock. For Finlux Cables also, I think the stock is going through a revival. Again, a price volume breakout, the stock breaking past about the last 1 month of resistance. And there was a corrective wave which was going on for Finlux Cables since the last 2-3 months. From the June highs of 1650, the stock had fallen down to almost 1350, 1380 mark. So it looks like that the stock is restarting the process of post its correction and should be able to surpass the levels of 1658 again.
Right, okay, let's take a very quick break. Glenmark Pharma, of course, that's the big buzzer today. Given that the US FDA has issued the Form 483 with 0 observations, that and many other charts we'll analyze after this very short break. Back with closing trades, right here in ET now. Still holding through, actually, no, I stand corrected. It's cooled off completely for Vodafone Idea. One would have thought that it started off okay and built on to that. But post the con call, you are seeing much of those gains actually fizzled out. Though still in the green, still got a long way to make up for last week's losses. For the Nifty, though, that's not the case. It's pretty much at the day's highs right now. A big spike coming in the last few odd minutes or so, 0.5% higher. Charting our course now to 26K. M&M, SBI, ONGC, Bajaj Auto, they're the ones which are charging ahead, along with, of course, an HDFC Life, BPCL, Hero MotoCorp, Bharti, HDFC Bank. That's also, duly supporting the market right now. But Deepak, just wanted to get your sense in on pharmaceuticals. I mean, the rally did begin about a quarter or two back, and we've often spoken about this as well. But would you go selective within pharma, or are you convinced about the move and would sort of broaden your exposure?
To be fair, Aisha, we missed this move. The move has been fantastic. Overall, we kind of didn't recognize it. I think it's been there in both the large caps and the mid caps. The small caps don't really. I mean, we don't have enough enough in that sector in small cap pharma for us to bother. But we've seen that in general, pharma has done well. There are companies, of course, that look cheap like Natco, but there's a situation where some of their their few fortunes will last maybe 1.5 to 2 years, and then they get like 2 or 3 years of a hiatus before the next thing starts. So perhaps that's the only reason why it's cheap, and everything else, including the Sun and the larger players, they seem to have run up quite a bit. So I think there are two things happening now. There's a FDA surge of attention in terms of after COVID, they haven't done that much, but now they're actually coming and doing a lot more of those inspections. So we're going to see a lot of results. A lot of announcements that come in. So based on that, you do have a risk because something like granules can happen. And by the way, we own some of that as well. But there is, there are some companies where they've come out with flying colors or without any observations, which I think is where perhaps the future is, because once you've gone through this risk, I think the pharma sector should do continuously well going forward. The general idea over here is in overall, whether it's healthcare or pharma, there is going to be a greater demand from the West. They are growing older. Their interest rates are coming down, so the investments in the space will start moving even more further. And I think Indian companies will benefit as more. And plus, whether it's generics or API or even formulations, I think Indian companies stand to benefit. We probably missed the rally, but may not be still a bad time to get in if you're looking at a 5 to 10 year horizon.
So that's a view on pharma. But what are you doing with granules, incidentally?
We've held it. It's actually it's in a momentum portfolio, so it's more driven by an algorithm that will tell us when to get out. So we're not looking at it from that fundamental aspect, but I mean, of course, the news has come in, and that's what's driven the prices around. So if you ask me, if just from the algorithmic perspective, it might go out in the next rebalance, but then we allow every stock a certain amount of time before it kind of fails the algorithm and then has to move out. So this is not a fundamental based pick for us. In fact, within that space, I'd probably not pick granules as my top pick, but I would have looked at more large cap pharma. But yeah, that is more a momentum driven play than it is anything else.
Fair enough. So that was a momentum driven trade that popped up. But what's the view on M&M, Deepak? And I think apart from IT, autos is that most debated sector at the moment, because on one end there is that high inventory and higher discounts and plateauing of demand. But on the other hand, there is this expectation that perhaps rural economy will pick up, or there will be that continued momentum. Very, very divergent at the moment. Which end of the debate are you sitting on, especially when it comes to four-wheelers?
So M&M specifically, we're actually quite long. So we've been long for a while, but there's multiple reasons for it, because M&M is not just an auto company; it's also a holding company for Tech Mahindra, for all the other companies, the defense outlays that they have, and a bunch of other things as well. So I think that way it's a multifunctional play for us. But the auto space specifically surprises us because of the attention it's getting in the stock price. It's not yet demonstrated anything meaningful in the stock price. Even in numbers, this quarter should have been good, but it's okay. It's not that great that would cause such a spike in stock prices. They've crossed 3,000 today. Very meaningful return for the year. So not complaining because we own it, but I think one should not look at it primarily from the lens of just auto. I think more things are there internally that give it other levers of attention. However, the numbers in September might surprise us, hopefully, because the numbers in July and August have not meaningfully been better. But it's across the board. All auto companies are doing well. Even two-wheelers are, and even though their numbers are also not that great. So sometimes, you can't explain markets and you just accept them as they are. So maybe that's what it is right now, just, riding it and hoping for good news coming in the future.
Sense. That's the take coming in on M&M. But Kunal, since you've been tracking Tata Motors for a while now, what do you read on the charts? Because along with M&M, that also got into a little bit of a consolidation.
Yeah, and the consolidation is getting a bit steeper for the stock, because the stock which made a high closer to 1175 end of July, start of August. From there, I remember, I think there was a news flow on the Tata Motors DVR conversion. For that, perked up the stock by a margin of 150 odd points. You saw the stock moving from 1025 to 1175 plus mark. But post that, we've seen the stock correcting itself and then cooling off from that 1025 starting point for the rally. But now I believe that the stock is retesting its 200-day moving average. So what we are seeing on the charts is a definite sign of underperformance for Tata Motors with respect to its four-wheeler peers, the likes of M&M, etc. On the other hand, the stock is holding on to its 200-day moving average. But there is hardly any major price movement into the stock in the last 3-4 days, which means that there is more of a balancing out which is playing out within the sector from the auto pack, like moving up from Tata Motors and then shifting on to the other sector, other stocks within the sector. I believe that it could probably mean that maybe there could be one more leg of correction, a final leg of correction which could happen for Tata Motors. That could take the stock back towards say 920, 925. That would be a very good level to go for a contra buy.
Coming back to you, Deepak, and interesting that you said you have to accept sometime what's happening in the market. And I found myself saying that yesterday when we were all trying to book those tickets for Coldplay concert. Did you try your luck as well?
I'm not that. I mean, I by the time I got to know, everybody was showing 500,000 and odd for the Coldplay. There's a show in Abu Dhabi a few days earlier. It's probably cheaper to go there and get a ticket because, by the time you get a ticket now, it's going to cost in the lakhs perhaps. So it probably is cheaper to just fly to Abu Dhabi a few days earlier than the Mumbai one, and then get tickets for the show there. It's cheaper. It's been cheaper everywhere, even in Australia, than anything that's available in India. So, I'm cheaper. I'm talking about the effective market, because people are pricing tickets at now 90,000 plus per ticket. And I'm not that much of a fan of Coldplay to say I'll pay so much. For bands like Metallica, I might still do it, but that just shows my age more than anything else.
Well, okay. But yeah, there are many options. Abu Dhabi, there's Seoul as well. And I think there's Dubai right after India, if I'm not mistaken. But it's like, someone was joking the other day saying that a friend with 10 Coldplay tickets for the India concert is now filing for an IPO.
SME IPO definitely with the kind of,
Yeah.
kind of numbers that we have seen of late.
Yeah, but that's not it. Lots to really cheer about and celebrate. And Kiran Rao's directorial Lapata Ladies is India's official entry for Oscars 2025. The film, co-produced by Amir Khan along with Kiran Rao, garnered very positive reviews upon its release from audiences and critics. And the primary aim of Lapata Ladies was not only to entertain but also to promote a social change. Through the tale of two rural brides, Rao managed to bring forth a conversation about women empowerment, gender equality, and the struggles that women in rural India face daily. The rural backdrop, complemented by nuanced performances and very strong direction, resonated well with both critics and audiences. Quick break on that note. When we come back, lots more.